your eye out on. Nikhil Ranka, CIO Equity Alternatives at Nuvama Asset Management, joining us at this hour to talk to us about markets and more. Nikhil, let me first try and get a sense from you, in particular within the pharma basket. Biocon has been particularly active. You believe that justified the kind of moves that the stock has made, and at these valuations still attractive, you reckon?
Good afternoon, Harsh, and thanks for having me on the show.
Pleasure.
So if you look at Biocon, Harsh, the key trigger was, if you see biosimilar segment, which is the key revenue driver for them, this quarter there was almost a 300 crores sequential improvement in revenues, and margins have also been fairly strong this quarter. Plus, if you look at the management commentary, they have very clearly guided there are a slew of launches that are lined up for them in that segment. And from here on, every quarter, the guidance is the profitability should keep improving over the next few quarters for them. And on the regulatory side, also for the interchangeability, there has been a lot of regulatory concessions that's been given by US FDA. So all put together, I think the stock still has legs. We can see further 10-15% up move in Biocon, and we have a fair value of closer to 500 rupees for the stock.
Interesting. Okay, that's the take coming in Biocon right now. Asian Paints is the other case in point. That's holding up very smartly today, up about 4% higher. And Harsh, we were talking about the commentary from the management, right? The fact that they still actually see a threat and competition heating up in the sector. They're still not negating the effects of competition within the space, and they're still talking about a very, very subdued kind of guidance, if I can call it that.
Yeah, I mean, the numbers and the guidance painted a slightly divergent picture in comparison, but the stock obviously is doing very well for itself, 4% higher. The sense, of course, is that competition has remained as is, and therefore, at least that is not the reason why we've seen growth. Nikhil, anything that stands out for you to justify the kind of move that we've seen on the stock for the last couple of days? 5% yesterday, nearly 4% again today, so a 10% move in all in 2 days.
So Harsh, on the call, what you said is right. The management did guide that the competitive intensity in the sector still remains very high. And this quarter, there was a benefit of early Diwali in that sense. So a lot of demand, which last year came in Q3, came into Q2 this year. And going forward, they have maintained that EBITDA margin will stay in that band of 18 to 20%. So all put together, you are still seeing an EPS of closer to 55 rupees for FY27. However, what has happened was that given the fact that competitive intensity was very high, a lot of hedge funds had this name as a funding shot for them. And when a double-digit volume growth came this quarter, it took the street by surprise, and there was a lot of short covering that has happened in the name per se. I think closer to 3,000 levels, a lot of positives get built into the stock price. And the stock should then consolidate between this band of 2,700 to 3,000 rupees, I feel.
That's the take coming on Asian Paints. I'm just looking at SAMR numbers there, and there obviously seems like a one-off, which is why you have that sharp uptick in the bottom line. The revenue, of course, is absolutely flat. We'll analyze those numbers because you can see a little bit of a sharp reaction coming on the earnings as well. But of course, there's more than what meets the eye. We will dig out more details, but after this very short break. Trades, and still in conversation with our two experts, Kunal Bothra as well as Nilesh Jain, still with us to talk about where they feel the market is headed next and what could be good opportunities in trade. We were just talking about leadership names, and that really continues today with the Hindalco holding up very strongly, good 2% higher. ICICI Bank is looking very good. L&T stays, and Bharti, which is now inching closer to that 2100 plus level. But still in conversation with Nikhil Ranka. Nikhil, just what's your own preference or bias within the entire banking pack? Because what started off with PSBs also of late faded away, and it seems that once again private banks are the ones which are finding favor in the market.
So Aisha, our preference will still be in the banking space for large cap private sector banks. clearly, if you see the valuations have become very, very palatable in that space. Most of the large cap banks, which earlier used to trade in excess of 2 times price to book, are now down anywhere from 1.3 to 1.8 times. One of the key concerns I feel the street has on the banking is whether we see a further rate cut in the December quarter. Because the impact of the 75 bips rate cut that we saw 3-4 months back flew through in the Q1 and Q2 quarters, where we saw on an average 15 to 20 bips NIM decline for most of the banks. If we have a further rate cut in the December quarter, then probably 10 to 15 bips of another NIM impact can come through. And that is what I think is keeping the stocks a bit subdued. But my sense is post that we should see NIM normalization and these banks should bounce back.
Also, Samvardhana Motherson's numbers and the stock is flying in trade. In fact, doing very, very well for itself. 2.5% higher now, and from the lows of the day, much more than that. Huge spike on the stock, 3% higher. Strong beat on profitability. Motilal had estimated a 650 crore odd profit after tax number. I'll pull out the consensus as well, but for the moment, it's a very, very strong beat on that count. Kunal, views with regard to Samvardhana Motherson? Anything that you're spotting in terms of this 3% move, and what next?
This could be a potentially strong breakout move for Motherson, and apparently the stock had underperformed in the last, I think, month or so. I remember, I think 107, 108 was the resistance where the last time the stock reversed from, and on the downside 100, 102 was the support for Samvardhana Motherson. So I think it was trading into this 5-7% band potentially for the last 3 to 4 weeks. Breakout of this 107 mark now puts the stock into a potentially swing upside mode, where we may look at 114 to 115 as an immediate target.
The consensus in terms of profitability was 759 crore. It's come in at 827 crore, Aisha.
So that's quite a beat.
Yes, so it's a very strong beat with regard to those numbers. Of course, keen to understand how much of that is margin accrual. I'm going to just pull those numbers out. But yeah, stock has definitely moved 3%.
Okay, that's the take coming in right now on the stock, and you can see that spike up reacting to its earnings right now. But we should in fact try and get in our researchers as well to try and analyze what exactly led to that kind of bump up and such a big beat coming in on PAT, while revenue on a year-on-year basis is largely flat. But what were the nitty-gritties of the quarter? That is something that remains to be seen, and what contributed to this kind of growth. But Nikhil, I don't know how closely you've been tracking Samil. Any take that you may have on the earnings or the entire sector per se?
So, Aisha, unfortunately, the number just came when we were talking, so I haven't had the opportunity to look at the numbers very closely. And therefore, it won't be fair for me to comment on it without analyzing properly. From the headline numbers, it seemed that, both EBITDA and revenues were quite in line. So I think it has to be something below the line adjustment that has led to the profitability beat. So unless you actually see and dissect the numbers, it's very hard to tell what has led to that beat on the profitability.
Okay, all right. So that's of course on that. But is there a tilt, Nikhil, that you have in terms of what is it within the auto pack that you're liking? Give us a sense.
So my sense is, names like Samvardhana, if we do have a trade deal somewhere down the line in the next 1 or 2 weeks, these names should react positively. In general, if you look at it, auto names have seen a very decent rally post the GST cut announcement. Stocks have been up anywhere from 15 to 20%. And therefore, my sense is a lot of good news is already built into these names at the current levels. And our view is the upside in these names is probably capped to 5-7% from the current levels. What we will have to see is whether the same sort of buying we see for Q3 also, because it shouldn't happen that whatever was the pent-up that was there happened in the October month, and then November, December, again we start to see very anemic 2-3% volume growth, because then stocks will start giving up the gains. So incrementally from these levels, we are a bit cautious on auto names, and till we see the November numbers, I would say one should be a bit cautious on that side.
Okay, let's get in some perspective as well from a very keen and avid watcher of the India markets and, of course, across the globe as well. On the interview, and the entire interview is going to play out on Friday at 3:30 p.m. I was chatting with Stephen Dober, and he answered some of the quick round of questions that I had with him, from, of course, the top Indian sector that he's betting on, to his view on the Indian rupee, the Fed, and, of course, the next big emerging market to watch out for as well. Here's a slice of that interaction. So now we're going to play something called the rapid fire. The rules are very simple. I'm going to very rapidly ask you some questions, and hopefully your answers would be full of fire. You just have to be very quick with it.
Okay.
Okay. So your first question is the sector in sweet spot. Your top sector in India for the next 12 months, if you can answer that.
Yeah, I think I'd probably look at the banks.
Banks. Biggest market risk. Biggest risk for India in the near term, would it be geopolitics, valuations, or global rates?
Geopolitics.
Okay. Dollar dominance continues, bullish or bearish on the rupee?
Bullish on the rupee.
Bullish on the rupee. Which comes first, Fed cut or India cut?
Fed cut.
Okay. Outside India, one emerging market you'd be overweight on today?
Brazil.
Okay. You were very, very rapid. Congratulations. But thank you, Stephen, for your
Thank you
time.
for having
It was
me.
great chatting with you. Lots of insight.
Good.
Thank
I
you.
enjoyed it. Thank you.
All right, so you have that interview to look forward to, and it'll be a good watch. But Trident, the numbers coming through as well on the bottom of your screen in terms of what those numbers look like. There's Eicher Motors. Okay, profit at 1369 crore versus the 1423 crore number, which was penciled in by analyst estimates. Okay, not much of movement on the stock price. We'll wait for more numbers to trickle through, but Eicher Motors definitely looking like something which could be in focus because of the numbers that are coming through. It's definitely a miss on the profitability. There is a decent near 5% lower in terms of what the expectations were versus the actuals on that consolidated net profit number of Eicher Motors. We'll pull up more numbers as they come through, but I'm just going to quickly also take you through what we were penciling in from Eicher Motors. Mind you, 26.5% was what the RE margin number was expected to come in at. 26.7% to be absolutely precise, and RE of course being Royal Enfield in Eicher Motors' case. Revenue is expected to go up by 43%. Profitability was expected to be around 1423 crore, which is a 30% jump up from the same time last year, which was at 1100 crore. That profit number, instead of 1423, has come in at 1369 crore. Now I'm going to also try and pull out the top line number for you to try and get a sense as to how that one is looking. But for the moment, it's a miss where the profit number is concerned, where Eicher Motors is concerned. The stock obviously slipping very, very precipitously. It's down now nearly 1.5%, 1.2% almost. And from the day's highs, we've seen the stock down nearly 2% now from the day's highs. So surely coming under some bit of pressure, given that profit number is a bit of a miss. 6172 crore is the number on the top line versus the 6091 crore number that was penciled in. So the top line number doing okay. It's the profitability which has taken a bit of a knock. 6172 was the top line number versus the ET Now poll of 6091 crore. So that one also we've seen come in largely in line, in fact. So the profit miss likely is driven by EBITDA as well as the margins number. We'll wait and watch as to how that margin number has come through. But yes, there you go. So 1513 is the EBITDA number, which is also largely in line. So I wonder what that difference therefore lies. So you're seeing a decent number on revenue as well as EBITDA I'd reckon that there could be something between those two line items which has impacted profitability, because profit also has a negative bias. It's less than 5% lower than estimate, so technically it is in line, but it's definitely lower than what the estimate was, maybe 4% lower than the estimate. So
I wonder why though, because
Yeah.
I mean, RE has managed to significantly outperform the industry in any case, and these are volume figures that you get on a monthly basis. So there's no
Correct.
sort of, drawdown from there. And this is a 43% volume growth in the second quarter itself that we were factoring in. So I wonder what really went by with the numbers. But yeah, we should actually get in our research analysts perhaps to talk about these numbers as to what could be the reason that they're not quite matching up to the expectations. Because like you're saying, I mean, just going by the prima facie details, one can't really pinpoint any factors at play. One, of course, needs to see what VECV margins, etc., and what that segment of the business actually performed like.
Yeah, that's true. Marginal miss on PAT is what the numbers seem to indicate. But Oyster Motors is obviously one stock which is in focus. Nikhil, your take with regard to, and I'm not talking numbers in general, the stock run-up has been fantastic. So Oyster Motors shareholders have done really well in terms of returns that the stock has given them. But give us a sense now at this point, can it continue to do what it has done over the last maybe year and a half?
So, Harsh, if you actually look at it, last 2 months have been very strong for iShares. Earlier, if you used to see, RE used to do monthly volumes of close to 90,000 units. And for the last 2 months, RE was doing anywhere from 1.1 to 1.25 lakh units. So we've clearly seen the benefit of some pent-up buying coming through in the case of Royal Enfield. Further, if we build in 1.2 million sort of volume number for the full year and a 25% odd EBITDA margin, then what we are looking for is a 240 rupees EPS for FY27 in the case of iShares standalone. 30 times number to that would mean close to 7,200 rupees of fair value for RE business, and you add 300, 400 for the CV business. That would make the fair value somewhere closer to 74, 7,500, which is like a 10% upside from here. However, the caveat here is that the volume number of 1 lakh units per month should sustain. And that is something that I think we should watch out for in the coming months of November and December, whether that volume run rate of 1.1 sustains or we fall back to 90,000 units in that sense. My sense is this quarter there could be some EBITDA impact because to clear the earlier stock, there would have been some discounts that would have been given and the company might have absorbed that one-time cost in the P&L. Because of which, I haven't seen the numbers, but because of which probably there could have been a slight miss on EBITDA is what my sense is.
Okay, slight miss on EBITDA, but EBITDA, at least the margin number, Nikhil, looks largely in line. Or rather the margin number wee bit lower, but the EBITDA absolute number looks largely in line. It's the profitability which has seen a slight downtick versus the expectation. It'll still be called in line, as Srishti puts it on the group, but it is a marginal miss nonetheless because it's 4.5% lower than what the estimate seemed to read into. On charts, Kunal, this one now bouncing back. It fell below the 6,800 mark. Now bouncing back upwards towards 6,833. Give us a sense on charts. How does it look?